All right, hey guys, it is Axe. The date is Saturday, January 14th, 2023. And I'm going to give you a quick overview on a chart that I think is pretty fascinating and it sets up a pretty good trade. First, I want to say thank you for all of you, for the members, for waiting patiently while I was in the hospital and recovering. I was doing a ton of these videos and then, I got banged up and now I'm back and trying to get back in the swing of things. So I'm going to be doing more of this. But if there's something that you want to see, please reach out. You know how to reach me. It's on Discord, in our Discord chat, or you can DM me. You may have to send a friend request first, but that's all good. So if there's something you want to see, let me know. I'll get into it. If you're not on the Cake Trades Discord, go to caketrades.com, caketrades.com, and at the top you'll see a little drop-down menu that shows you how to join. We have a free section. We also have a premium membership. In the free section, you can basically get a coupon for a free month to try it out. So anyway, that's all that stuff. This chart is TQQQ. For those of you who are new to trading or don't know what that means, TQQQ is a leveraged ETF that follows the Qs, as they say, which is the QQQ ETF. And QQQ is basically comprised of NASDAQ, NDX, NASDAQ components. So SPY is for SPX, QQQ is for NDX. And the TQQQ index basically is leverage, which means more gains, more losses, depending on the trade. And hopefully you're on the right side of it. So I have a nice setup here. I want to talk about it. But first, I'm on a 3-day chart, by the way. Daily is nice, but sometimes it can set you up with a trap. For example, Monday we had like a dragon, what was it, a evening star or something like that. And it was a pretty ugly candle and it looked like a reversal was brewing. Tuesday they sort of set it up to look like maybe we had some continuance, and then basically we blew through it by the end of the week. So weekly is great for trend spotting, and we're looking at a longer term time frame on this trade. So weekly is good, but 3-day is a little bit more granular, and it gives me a little bit more chance to understand the movements within the larger trend. So anyway, we're back in this April-May range when we tested these lows, and I think that's interesting because I've been saying in the crypto chat that a lot of these crypto moves into the end of the week, with things going crazy, they look a lot like that April-May bottom and bounce. So that's just something to think about and some confluence perhaps. I don't like that we're leaving all this behind down here. This is really ugly. What I would love to see is like a green candle like this at these lows. Everybody's happy. Everybody gets their fill. And everybody gets a great sit down and walk away moment. Although knowing market makers and the big money, the way they do things, they'll probably undercut it. Everybody freaks out and then they recover it. And then you buy that. But anyway, you could argue that this was a retest of the 2018 lows, but still, those are wiki. This is wiki. I just don't like it. I would love to see that green candle, like I said, to finish this move. But we have to deal with what we got. We're back testing the September of 2018 range, which is interesting. Let me just pull up the QQQ because it's a little bit different. This didn't even back test this February. We're in this range here. I remember trading through that. It was pretty tumultuous at the moment. Anyway, just so you understand the ranges and what we're back testing and everything. So what we have, if we zoom in, we set the low, we set a higher low, right? Rounded off another low. So you already have you could say this is a double bottom. That failed. Okay, now we have a double bottom. And if you look at my timeline back from like the COVID recovery, like April, May and beyond, the double bottom was like my premier setup. Like you could tell, like stocks were doing it all over the place. Double bottom, and it set up a move where you could basically, if you bought that and walked away during that COVID recovery, I mean, you'd be sitting pretty. Well, as long as you didn't hold into this bear market. But then we not only have that, but we have another double bottom, right? So we have like double bottom. We have like a triple double bottom. Like that on its own, without looking at anything else, that is pretty bullish, okay? But if you look at like RSI, in KST to some extent, I don't really use that for divergence as much, but it's there. So we have like the low, and then we have RSI higher, price lower, that's divergent, and then we have that double bottom, and RSI is even higher, right? So that's definitely some bullish divergence. And I would say that the divergence retraces the origination of it, and I would say that's around here, which means we should get to like 35 just on that divergence move, right? So without any other technicals, 35 from 20. That's pretty nice. Now I'm going to turn on all my drawings, and let me just close that. I've outlined what I think this looks like a clean bear impulse in the Elliott wave terms, right? Some might argue that because this sort of broke into this range that invalidates the pattern, but for me, it's clean enough. It's working out well. This third wave, 66%, it was the largest, as it should be. 56% down, 59% down here, very close. To me, that is very clean. And so in an L8 wave impulse, you always retrace eventually to the end of the fourth wave, the start of the fifth. And that gives us like 39, okay? So I said we should be at 28 to 30 based on that divergence. And then we've got, that gives us some liquidity here. You notice this area. Above that, we have a gap that likes to get filled, and then we have our final target of like 40, right? So we have a couple targets, and we have a technical setup that basically, like I said, we've got the bear impulse, Elliott wave that should retrace us here, and we've got that double bottom, and then we've got the RSI divergence. These blue boxes basically measure the length of the move. So what I did is I measured the time of the down move and the time of the up move, and they're about half the time, which makes sense because it was about half the distance. But in our case, it was like 61 days down, and we can expect maybe a local high after 30 to 31 days, and that gives us February 7th. Give it like 3 to 5 trading days. There's an OPEX in that month, so sometime early to mid-February, I'm going to look for a local high based on this timeline. And what I've got here is just sort of an outline corrective. I think we have this to clean up here. This box, we may linger a minute, especially with an OPEX weeks coming up. We may linger, but I think we're going to clear this box, clear this wick, and we might come back and test this on like a 4-hour, 1-hour time frame. And then we're going to sort of bounce to our target. And the reason I didn't go all the way up to this 39.40 range is because typically in a corrective, it takes a minute. You're going to go up, down. Like you might start a new impulse in the reverse of this bear impulse. So we could do something like, just let me give you an example. On the small time frame, you could do something like this, right? And on the bigger time frame, boom, 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 boom. Just an example. It's not measured or anything like that. Okay. So I think on the corrective, we're going to come up and we're going to clean up this range here. Like I said, we may chop, we may come up here and bounce down, and then, but eventually we're going to get to this 30 to 31 range. And then if we come down and back test this and hold it, that's like load the boat moment, right? I know a lot of people are concerned about like, oh, we've been rallying so much, I don't want to like buy it now because we've already rallied so much, I feel like an idiot buying the top. Well, if this move pans out, like anywhere in this box and you get a fill, I've already measured it here, it's like a 53% move. Like that's pretty damn good. That's how, like, you put in 1,000, you get 500 back. Now you have 1,500 bucks. That's pretty, like in a month. If you could do that every day, you'd be sitting pretty. So anyway, like you can buy here. In this box, I think you're safe to buy. If we invalidate by going below, I think you need to start maybe scaling out. And if we break this like 1850 range, that's trouble. But in the box, we're okay, especially if we get above it and we come down and test it short-term time frame and bounce like that, buy more. And then plan to take some profits around this range, 30 to 31 in February. And then we're going to wait for this bounce. And that's an idea of how I think it could play out. It could play out differently, but I think in general, that's my targets, and that's sort of my stops down here outside, below the box and then below this 1850. So for me, I think we have a pretty good setup. And what does that mean? It means that the indices are probably going to rally for another month. I know people hate it. People are going to, you could, like, if you really want to get nitpicky, you could say, well, the divergence started in January, and that's up here, 64. And if I turn drawings off, go to the Qs, okay, we're talking like 366 QQQ, okay? And that would not surprise me. And that's just going to blow people out who are short, and it's going to be problematic. But that's the way it is. If you look at a bull market, coming out basically straight up the whole time. Like you had all these wicks are the dips that you got to buy along the way. Everybody, you get up here and you're waiting to come back down here because you want to buy this. You never got it. And same thing in coming out of this. And if we go back further, 18, and this setup looks pretty good. I'd love to have something like this. Look at all these moves here. So I'm just saying we're at a moment where this could be bottom and this could get up. Even if we get up to here and fail, big fucking deal. Take some profit and buy again. So that's my idea. That's my TQQQ trade. I hope you like it. Feel free to give me any feedback. Again, if you're not a member, go to caketrades.com. And I look forward to seeing how this plays out. Thanks, guys and gals.